was I right or was I right? If you watched yesterday's video, I told you guys, I think we still have more upside. Yesterday's video, I tell you guys this as often as I can because I want you guys to know this. Alright, as a fact, that in a strong bull market, we get a lot of bounces off the 5-day moving average. That's what the red line is. For all my old viewers that's been watching, you guys know what's up. But for my new viewers, in a strong bull market, the 5-day moving average is often tested many times. It's happening there, happened there, it's happened there, it's happened there. Of course, we get some dips every now and then where it'll drop down to the 13-day or maybe the 20-day, maybe even the 50-day, depending on how badly the market makers want to scare us. But more often than not, in a strong bull trend, the 5-day gets tested. Test here, test there, test here. And today, it's the same thing that happens. And yes, it dipped below. But remember, think in terms of areas of liquidity. What would the market makers do if they want to fake us out? They would probably try to push price below the 5-day, right? To scare us. And you got some retail traders that see that and be like, whoa, our support's broken. Gonna start shorting it. But guess what, guys? This is a daily chart. It takes a whole trading day for these candles to play out. So just because you see it happen intraday don't mean it's gonna close there. As a matter of fact, that's my favorite place to enter a trade, is when I see it going just below the 5-day moving average. Or when it depends on what the support level. So if it's above the 5-day, I look to enter when it falls just below the 5-day moving average. And then I enter up. I want to see the market makers take out stop losses before I enter. Okay, it happens often right there, happens there, happened there. Okay, now of course if it's below the 5-day moving average, then automatically my new support will be the 13 and then the 20, and I'll treat it as such, right? So for example, if my new support is the 13th day, I will look to enter if it falls just under it. Okay, this stuff happens more often than not, and you can look at the chart and see for yourself. When you understand this, you come with a strategy. You're able to identify areas that you would feel comfortable entering before the market even opens. You're looking at the charts already, like, oh yeah, that's where the moving average is. I'll probably enter just under it there, just under it there. You already know your entry and you already know your exit, whether it's for a small loss or for profits. Okay, so back to SPY, we had closed right at the resistance level. Okay, many times the SPY touched that level and it pulls back. You see there. That's many times, guys. So what are we thinking? My fellow retail traders, I ask you guys, what are we thinking? Are we thinking of shorting again? Are we thinking of shorting and calling a top in this bull market? I tell you one thing, if you are gonna short, which I do not like to short in a strong bull market, but if you are, don't short at support, right? You would want to short at resistance. That's a good place to short, but you have to understand or consider at the very least that there's a chance that the market movers, the market makers, are going to want to fake us out. We are in fake out territory. We see how many retail traders, ask yourself this, how many retail traders you think are looking at the same daily chart that we are looking at, and are also noticing, like me and you right now, where the SPY has closed. Isn't it a little too perfect where the SPY closed and got rejected at? It's too perfect, guys. This is by design. This resistant level is created purposely by design, which means this area of liquidity. Let me move this volume. This area of liquidity where the orange area is, where possible potential stop losses are clustering up. It was by design. Okay? So what do you think our fellow retail traders are thinking? Are they thinking of shorting this? Now that we're at resistance, it is the perfect spot to short it, right? Now, if the market makers know this and they see the orders, because they can see our orders, especially if you use Robinhood and Webull and stuff like that, if they see the orders that a lot of people are shorting this market at resistance, what do you think they're going to do? They're going to take out the stop losses. Because most retail traders, they're trading based on the structure. So obviously, if they're shorting at resistance, they would most likely set their stop loss above resistant levels. All right, potentially around this orange area. So if you are going to short it, that would be the best area. Not at resistant, okay? Not at resistant, because in a bull market, I'd rather us look for buying opportunities. Unless we see some crazy false breakout and it gets pushed back, the market makers are looking to bring it down. That's a good sign. So follow the smart money. Okay? So most of our fellow retail traders are probably looking to short because they see it fall so many times from this level. So market, I'm going to say it again, if market makers want to screw us over, they will push it up past the resistant level, taking out all the stop losses of our fellow retail traders who shorted. They get stopped out. This will attract the breakout traders, the ones who aren't patient, are catching FOMO. They'll buy in. What do you think market makers will do from there? Will they keep pushing it up? Shorts cover, going blow off top, or maybe they'll push into the area of liquidity, take out the shorters, draw in the breakout traders, and then push it right back down under this resistant level. And then they screw over the breakout traders. Screwing everybody over. So that's the two scenarios. Okay? They could push it up, take out the shorters, push it back down, take out the breakout traders, or they could push it up, shorts will have to cover, and then SPY will just go up even higher to a blow off top. Okay? Or what's the third scenario? It could get rejected from there again. And tell you what, if we do not get the blow off top scenario or some type of false breakout scenario, and instead we get a traditional rejection at the resistance line, I'm going to look for buying opportunities again at one of my moving averages or one of my support levels around there. Okay? Because if they are not taking advantage of this area of liquidity, that means they still have plans for it. So I will still remain bullish and look for buying opportunities, because this is not where we want to go long at. We got to get defensive and build cash if we are bullish and look to buy at better levels. Okay? So guess what? I am neutral on the SPY right now, and I'm going to stay on the sideline. I've been bullish. You guys know I've been bullish. If you guys have been buying calls with me or accumulating with me, you guys have been making money. I hope you guys have. But right now, I got to say, guys, this is not where we want to catch FOMO or go long at. We are at the tippity tip. Okay? Sometimes the best thing to do is just to stay on the sideline. Better than losing money. Okay? But it's too much risk. So I'm going to stay on the sideline, and I'm going to see which one of the scenarios play out. Okay? If we get a rejection there at this level, I am going to look for buying opportunities. Okay? If it moves up, this is a good area to short. All right? And you got to have a stop loss. So from the 448 to 445 area, 445.50 to be more exact, that's a good area, good zone to start shorting. If it breaks above 448, just cut your loss. Okay? Because it could be shorts covering and it could go parabolic. It go higher, blow off top. Okay? But like I said, this is a strong bull market. I'd rather stay bullish in a bull market and look for buying opportunities. If it goes for me, if it just goes up and it never gets into area that I want, like these buying opportunities, that's okay. All right, I'll look to short here, and if it goes back above 448, I will just cut my loss. Okay, that's my plan. That's what I'm going to do. But other than that, I'm going to stay on the sideline and watch what SPY wants to do. Okay. And you take a look at the VIX. VIX is still looking extremely bearish. Okay, under all our moving average, you got these strong red candles. Okay, so with the VIX behaving the way it is, it's a high chance that SPY will just go we're most likely gonna get a blow off top, okay? Especially if we got a lot of people shorting, they're eventually gonna cover. Shorts will cover, bulls will continue buying, continue being bulls, shorts will cover, and you get a blow off top, okay? We'll see what happens. Moving on to Triple Q. Now Triple Q, unlike the SPY, Triple Q had a beautiful dip today, had a beautiful buying opportunity. I said on this day, I said a couple days ago, let's be careful with the Triple Q. We got Apple trading under, our market moving stock trading under the 20-day moving average, looking bearish, but looked like it was building strength. I'll talk about that in a couple seconds, but I told you guys we got to be careful with Triple Q, and sure enough, Triple Q dipped. But look where it dipped to. It dipped down to our 20-day moving average, critical support level, okay? And I told you guys yesterday that that looks good. That's a good, this is a bull market, and this dip right here, it looks good. So we want to see what happens today. Will it continue to stay above the 20-day moving average? Because if it gets below the 20-day moving average, that's a sign that we're rolling over and moving to a bear market. And sure enough, today we retested that 20-day moving average. And I said it earlier with SPY. I'm going to say it again with Triple Q. I love it when it just goes under my moving average like that and it goes right back up. And it tells me that liquidity, stop losses got taken out, and now it's bouncing, it's ready to go up. And look where it closed. 10 cents. Just a few cents just above our 5-day moving average, okay? So technically speaking, this is still bullish. Triple Q is trading above all our moving average, okay? I still got that 371 price target that still has not got hit yet, all right? Now we move to Apple. Apple, I said yesterday that looks like it's bull flagging, okay? Look like a bull flag, and if it breaks out of this, it's just like that, gonna be bullish again, because it was for 4 days in a row, it's trading under 3 of our moving averages, but it wasn't that far down. I said yesterday it looked like a bull flag, and sure enough today, that strength came in and just broke out, okay? Broke out, and we got this double top, which means in this area right here is an area of liquidity where stop losses are being set up, okay? So market makers could look to come out, take out this pool of liquidity, all right? So and yes, once again, because of the price action, the way the chart's looking, I'm bullish on Triple Q again, okay? Now if Triple Q starts trading under the 5-day moving average again, it could be a bull trap. Okay, it's possible we get a bull trap, but right now it's looking strong. We had 2 bounces off of critical support level, and it closed above all moving averages again. Apple is looking really bullish once again. Okay, it may come back to retest 146.67 around this area, because you know when we trade breakouts, what we like to see is it come back and retest the previous resistance as a support before we look to enter. Okay, so don't catch FOMO. Wait for a pullback. If we don't get the pullback, then oh well. Alright, that's up to you what you guys want to do. If I don't get the pullback, then oh well. I'm not going to buy the tip. Because if you want to beat this market, and if you guys been watching my video, want to trade like me, you don't buy the tip. You buy the dip, okay? It's not just a saying. It's not just a rhyme. It's the truth. It's good advice. Okay, so bottom line, I'm bullish on Triple Q again. Got a 371 price target. We'll see if 367.47 holds. Okay, we need Triple Q to stay above that level. If not, could be a bull trap. Okay, moving on to ARKK. ARKK, I did say I have a 142 price target, and this could be the start of the 5th wave. However, as you can see, we got another bounce off the 50-day moving average. It is trading above the 13 and the 20, but it's still struggling to get back above the 5-day moving average. That's kind of bearish, okay? So it's both bullish and bearish. So what does that mean? Once again, I'm neutral on ARKK. It's sideways action. I'm not looking to buy. As you can see here, the good thing about this is ARKK is continuing to make higher lows. Got a higher low, higher low, higher low. So what we need ARKK to do is make that higher high, and I'm hoping to see it get up to our price target of 131, and then our second price target of 142, okay? So let's see what it wants to do. We need it to continue to stay above the 50-day moving average. 50-day moving average is at 120.90, but it may slope up tomorrow. So we want to see ARKK stay above 121. Okay, now it's aftermarket and it's a low below 121, but I don't really care about what happens in pre-market and aftermarket. I'm all about what's happening during the market. That's where there's most volume. That's where the technical is most meaningful to me. Okay, so bottom line, neutral on the ARKK, standing on the sideline. Now looking at Bitcoin, I told you guys for 3 days in a row, Bitcoin was able to trade above the 200-day moving average, which was looking very, is looking very bullish. However, today it dropped below the 200-day moving average, and it dropped below our 5-day moving average. So we're seeing some selling pressure. Okay, so the next support level I want you guys to watch for, because this support level didn't hold, is right here at 42.5K. This was a previous high. Okay, so a lot of times, just like a breakout, when we see a high get taken out and we get a higher high, we like to see the previous high get tested. You know, kind of like a stairway up. You know, so it could go up, down, come back and test its previous high, which is also where our 13-day moving average is. And if it drop a little below, I like that. I like to see that, because not only will that probably bounce off of our 20-day, but it take out the areas of liquidity, if there is, you know, because I like to use the moving averages as support, and there are a lot of traders that also use the moving averages as support. Do they trade it exactly how I trade it? No, but a lot of traders, they do use it as support. So anyways, so keep an eye on this level, 42.5K. Okay, if Bitcoin fails to hold that level, our next support level is all the way down here at 41K. Okay, and if it dropped below 41K, the 50-day moving average is all the way down at 36.3K. All these rectangles right here, they're all areas of imbalance. So even if it comes back, if Bitcoin comes all the way back down and fill these areas of imbalance, technically speaking, that is still a higher low, and we could get a bounce around there around 33K. All right, this could get people bearish again. That'll be funny, right? If it drops all the way down here, it gets people bearish again. People think the sky is falling, only for these imbalances to get filled, and then boom, it bounces right up. Do I think it'll go that low? I don't think it'll go that low. I think we're back in the bull market. Okay, we might get some FUD news or whatever here and there, but you know, I'm strictly, you know, focused on the price action. This data, you know, nobody could scare me with the data. It's just numbers and charts. Okay, so those are the levels that I'll be watching for. I'm still bullish on Bitcoin. I think it's a buy the dip market, but we'll see. All right, 42.5K and 41K. Critical support levels. Watch those support levels very closely, okay? Now, those are all I want to cover. The next thing I want to cover, I'm going to cover THCX. Okay, this is the cannabis ETF. It's like similar like SPY and QQQ. Those are ETF, but this is an ETF for the weed sector. Okay, now this is a viewer's choice. You guys asked for Tilray and etc. Somebody mentioned Sundial. I haven't looked at Sundial just yet. I looked at this, and it's looking very bearish. We got a death cross right here, and this is starting to look like a bear flag. Okay, you know how we got a bull flag when it moves up like that and it goes base downwards a little bit, and then boom, kind of like with Apple. So you got this bear flag is up in a bull market, then it base down a little bit, and then boom, and explode. So with THCX, which is represent, you know, the cannabis sector, it's a bear flag. So this is not looking good. We got bearish price action trading below all our moving averages, death cross, and then you got this bear flag. So there's a lot of things saying stay away, it's a bear market. Okay, yes, but keep in mind you can make money in a bear market. You just got to look for selling opportunities. All right, so instead of buying at support or areas of liquidity that's taking out support, you can, it's the opposite. You just reverse it. So you would, instead of buying at support, you would sell at or enter at resistance. You get what I'm trying to say? So the chart looks bearish. I'm not seeing much upside. Okay, so we can look at Tilray. Yeah, same thing. It's just it's on a downtrend, just strong downtrend, trading under most of our moving averages. It's not really catching my eye. Also got a death cross coming. Yeah, they got earnings. I'm not sure if they beat their earnings. Gonna have to double check, but it looked like we try to get some buying pressure. But yeah, it's not looking good. We got the 50-day sloping downwards, 200-day sloping up, death cross on the way. And although we do got some bottoms here, this kind of look decent. Got a strong support level around here at 77.5, 77 cents. Okay. So yeah, it's down here. Okay, because you in the downtrend, you want to see a lower high, lower lows. So we got the lower high and a lower low, but it's not continued down. We're getting some double, triple bottoms, which mean a good amount of area liquidity down here. So if you would look to buy this, I mean, I'm not gonna buy this because well, one thing, it's a penny stock, and it's a strong bear trend. But the area liquidity would be around 73 to the 77 cent range. If you're gonna buy it, I'll probably buy around there. But honestly, this is a bear market. It looked like it's more downside. I wouldn't touch it until I start seeing more bear bullish pressure in, and that would have to trade above 91 cents, okay, to get my attention. But yeah, it's not looking too good. It just looks extremely bearish. I don't know how the earnings are going. Definitely check it out though, you know. But to be honest with you, yeah, I'm not touching this with a 10-foot pole. I'm sorry, don't mean to offend anyone, but yeah, that's my technical for this, for the wheat sector. It just doesn't look good to me. All right, so I hope this was able to help you guys. Hope you guys made some good money on SPY. You know, I'm definitely bullish on SPY. But you know, we entering at the dips, guys, not at the tip. So don't catch FOMO tomorrow. Stay on the sideline. Watch what happens, what the market makers wants to do. I'm bullish on QQQ again. Got a 371 price target, but if it starts trading below 367.47, keep in mind this could have been a bull trap, okay? But I don't think it's a bull trap. We had this strong bull flag. It broke out. Market makers wanted to break out for a reason. We got the strong pool area liquidity, so Apple looks good. So tech sectors look like it still have one more leg up, okay? Including SPY, QQQ. I think we got one more leg up before we get some major correction. But like I said, if this orange area for SPY does not get taken out or used to trick my fellow retail traders, and it just rejects from here, I'm going to look for buying opportunities, okay? So I hope that was clear. I hope you guys stay calm in this crazy market, continue to beat this market, and I'll see you all soon.